After punching through 6,600, futures are higher again. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Dani Berger. Bloomberg Open Interest starts right now.
Coming up, a resilient U.S. consumer retail sales data coming in hot ahead of the Fed's anticipated first rate cut of the year. And a seat at the table. The Senate confirms President Trump's Fed pick Stephen Miran, while a court blocks the president from firing Lisa Cook for now. And rethinking earnings, the SEC says it is prioritizing President Trump's push to reduce the frequency of quarterly reports. Dani?
Matt, I'm looking at another really good day for Larry Ellison. I feel like I've been able to say that for a while now. It's Oracle surging up 3.4% in the pre-market. CBS News reported that it could play a crucial role in the TikTok deal between U.S. and China. Now, we don't have the details of those yet, but it seems like it will include Oracle. What are you looking at?
All right, Oracle rising. I'm looking at Tesla extending gains as Elon Musk tweets his calendar. And he says, Daddy is very much home. It's a little bit creepy, that phrase, to be honest. But it doesn't matter to Tesla shareholders. They're up 1.4% again today, with Musk explaining in minute detail how he plans to go to work over the rest of the week.
Thank you. I hate that phrase. I hope to never hear it again. Matt, we also begin with retail sales data this morning, crossing about 30 minutes ago. It topped Wall Street estimates. Joining us from Washington, D.C. is Bloomberg's Michael Mckee, of the International Economics and Policy Correspondent there for the Fed meeting. Mike, what did the data say?
Well, basically, that the Fed has to think twice about how many rate cuts it's going to do if consumer demand holds up like this. Twice the rate of inflation in the month of August. Retail sales headlined up 0.6%, same as the month of July. Core sales, what goes into GDP, up 0.7% after a 0.5% rise the month before. Import prices also came in restrained, up 0.3%, and take out petroleum, they were up just 0.2%, but they didn't fall. And if exporters were cutting prices to absorb some of the president's tariffs, you would have expected a fall in import prices. We did not get that. Key categories in terms of the retail sales report: clothing up 1%. Of course, it was back to school month, so you'd expect that. Sporting goods and instruments up 0.8%, also kind of fits the time period. Food and drink, though, that's a real discretionary category, up a strong 0.7%. And electronics, I threw that in there, up 0.3%. That was one of the areas that's been tariffed. So we would expect maybe a fall there. Instead, we get a rise. And all this is going to be in the discussion as the Fed meets today. And as the Fed meets today, guys, we've got the intrigue of both Stephen Miran, newly confirmed to the Fed, and Lisa Cook, newly allowed to continue in her job by the appeals court, both expected to attend and vote. The market pricing in a 25 basis point rate cut. Question we have is, will there be dissents for 50 basis points from Miran or Waller or Bowman, or will there be no cut and maybe a dissent for no cut? Dot plot will lay out the anticipated rate path. That's what Wall Street wants to know. How many more cuts and how fast? And then, of course, we want to hear what Chairman Jay Powell is going to say. And I'm sure there will be some questions not only about the path of monetary policy, but what was it like in the room with Lisa Cook and Stephen Miran both there?
All right, you covered all the ground for us. Michael Mckee, thanks very much for that. Now, Tesla is higher this morning after Elon Musk posted that quote, Daddy is very much home. He says he will spend the week assessing Tesla's AI and autopilot ambitions. He talks about walking around the giant data center that he's building Colossus 2. And then he's going to be in meetings for up to 12 hours. He says they're back to back. Craig Trudell runs Bloomberg's global auto coverage. And Craig, it's a little bit weird to me that Elon Musk is tweeting out his schedule. Does this mean he wasn't really working at Tesla anymore before the $1 trillion pay package?
Yeah, he's home very much implies that he was away for a time. And I mean, this is in keeping with what he wants us to think, right? It's very much a narrative play on his part and on the part of Tesla's board of laying out this, new master plan for the company, putting targets that are sort of aligned with that plan out there to get everybody excited about the future. Making those targets, sort of tying them to paying Musk again, because that worked out well the last time. And, meanwhile, the company, I think that the real question is the business actually doing any better? And we aren't really getting indications that it is, in terms of, vehicle sales here in Europe have really been weak. In China, the company has been, seeing very consistent declines in shipments from its factory in Shanghai. And in the U.S., Tesla continues to lose share of the EV market, which is really going to be challenged after tax credits go away as a result of the Republicans, doing away with Inflation Reduction Act tax credits.
Craig, the share price is reacting to that, but not reacting to the news that the National Highway Traffic Safety Administration will be probing Tesla over the fantastic story with the autos team on Tesla car doors, the Model Y to be specific, not opening if there's a power outage. What would this mean for Tesla, and what do you make of the fact there hasn't been much of a share price reaction off the back of that probe?
Yeah, it's very interesting, because we cited within our investigation, our story last week, an example of a young child who was in her Halloween costume, who was trapped in the back seat of her parents' Tesla. That is almost verbatim what the National Highway Traffic Safety Administration is describing here as it opens this probe. This issue of Tesla owners, their vehicles losing battery. And Tesla itself acknowledges in its owner's manuals and in documents that it shares with first responders that, look, our doors just don't open from the outside if our vehicles don't have power. That's a real safety concern, particularly if you have young kids in your car. This is, leading NHTSA to open this investigation. And I would say, it's not necessarily the case that defect investigations are market moving, because they tend to take a really long time to play out. And it's hard to tell at this juncture just how costly this could be if it ends up ultimately resulting in, for example, a recall. I would say that, what could set this apart from other investigations for Tesla is it may not be something that they could resolve with an over-the-air software update. And if that's the case, if they actually have to, make some physical change to their vehicles, that could be costly for the company.
Maybe it'll be sold with a hammer from now on. Craig Trudell, our global auto czar there out of London. Catch, by the way, my interview with Tesla designer Franz von Holzhausen this week on Hot Pursuit. That's my podcast with Hannah Elliott. We will ask him specifically about the door handles that I assume he had a large part in designing.
Yeah, and that story, again, that Bloomberg story, really great to show that basically every different Tesla model has a different place for the manual release.
Right, they're maybe hard to find, especially if you're in a panic, right?
Of course.
And some of them are buried under rugs, right? Always carry a hammer. Always have something in your car to break the glass. I do that even in non-Tesla vehicles.
Hey, good to know, and I'm looking forward to that podcast and that interview. Matt, elsewhere, Oracle shares are extending yesterday's gains. The software giant is among the firms that would enable TikTok to continue operations in the U.S. if a framework deal is finalized, according to CBS News. Matt, if you look at Rich Go, literally every day has been a good day for Larry Ellison. He added $10.8 billion to his net worth just yesterday on the rally. Year to date, he's added $167.5 billion. He is the second richest person, so yay, go Larry. Here to join us to discuss the moves for Oracle is Bloomberg Tech's Caroline Hyde. So Caroline, yet again, Oracle making headlines, but this time for TikTok.
And remember, they've been a key infrastructure player with TikTok all along. They're basically providing, in many ways, their cloud offering, and then remember Project
we never
Texas. But then also think about Project Texas. When we were first thinking about the prior administration under Trump that wanted to ban TikTok, it was looked as an alleviation point that Oracle would say, hold on, we've kind of got a fix here. And within Biden administration, they said, we've got this thing called Project Texas. We can secure just US users' data and ensure that it doesn't get back to Chinese headquarters. Now, this is why Larry Ellison and Oracle are so intertwined in the TikTok story. It's been reported time and time again that there is a consortium of bidders. Blackstone dropped out, but Andreessen and Horowitz's name keeps coming up, as does Oracle's, that might in some way ensure that TikTok can continue to operate in the United States. Now, Bloomberg Intelligence is saying we don't think Oracle is going to give money. We think that they're just going to provide the infrastructure here and be able to make sure that we can trust the data. But it has been reported out that Oracle could indeed give a chunk of change alongside General Atlantic and others.
Yeah, Larry Ellison has been very popular in the Trump circle. He was right there at the Stargate announcement. He's done well in his ninth decade. Let's talk about Google. Let's talk about Google. They made an announcement about an investment in the UK right as President Trump goes to meet with King Charles, and it seems almost like they're trying to get in his good graces because the Justice Department really has an eye on them.
It does, and Alphabet has had some wins in terms of rulings coming that perhaps it doesn't have to break itself apart when it comes to its so-called monopoly in search, but we're still thinking about ad tech in particular when it comes to Alphabet. But a lot of companies are trying to be in the administration's good graces as they go to the United Kingdom. We're likely to hear from NVIDIA. We're likely to hear from OpenAI. They're likely to do deals with data center provider Nscale in the UK, which is a very young startup. So we'll see how it can really push out $5 billion worth of investment coming from Alphabet, the parent company of Google, into the UK. They're going to be building data centers just north of London. But $5 billion, compare that to $500 billion that was announced in the Stargate project that's here in the United States. These chunks of change need to get bigger, particularly for other countries, because the sheer scale of the focus on AI data center ramp in the US and in the Middle East pales versus what's the small amounts that's going on in Europe. They really need to beef it up. But all of that brings us back to Oracle, really, because that's why Bloomberg Intelligence thinks that they're not going to be putting money into TikTok because they've got so much AI data center build out to be doing. They don't have much cash to spare.
Well, I guess maybe the UK needs to be smaller because I don't even know how they have the power the energy to power something like that.
And we actually had the Energy Secretary, Chris Wright, on the show yesterday talking about the need for more nuclear in the United Kingdom, this agreement that you're going to see between the US and UK to fast-track nuclear build-out in both countries. But he's been slamming the UK, saying, look, you're not using the North Sea oil as much as you should be. So, yeah, energy's an issue. Also, land? Where are they going to build all these things?
It's such good questions. I doubt we'll get any of the answers in the next couple of days, but we'll look out for it, Caroline. Thank you very much.
Surely it's going to get smaller, right? I mean, the British Empire has just shrunk.
Oh, you mean like the land literally is going to get smaller, too?
Everything. Probably the economy as well.
Are you just doing this because I'm sat here?
Is Scotland going to stay?
I'm a British citizen, too, Caroline. I'm also offended. So there you go, Caroline.
Also, we are heads about these things. Sometimes the British need to be told that the empire has got smaller.
There you go. It's not going to help that Google's investing so much money in them. Anyway, Caroline, thanks. Let's get a quick check on futures this morning because we are headed to another record high, even though it is very slight. Some of the gains coming back after that retail sales data. By the way, Matt, NASDAQ 100, if it gains today, it would be 10 straight days of gains, and that would be its longest winning streak since 2021.
All right, so equity indexes are doing well, especially those heavy on tech. Coming up, the SEC says it is prioritizing President Trump's proposal to move away from quarterly earnings reports. Again, that would be really a seismic shift in the way U.S. business is done. We'll talk about it next with America's dad, Nathan Dean. This is Bloomberg Open Interest. Let's get now to high interest. Look what's making headlines around the world. The U.S. is in talks to set up a $5 billion fund to invest in mining. The U.S. International Development Finance Corporation is in discussions to establish the fund with the investment firm Orion Resource Partners. The potential collaboration is driven by anxiety about the supply of critical minerals like rare earths. The entertainment restaurant company Dave & Buster's, ticker is PLAY, is tumbling in pre-market trading after reporting second quarter results that came in well below expectations. Analysts across Wall Street are cutting estimates and price targets and apparently not going to Dave & Buster's. President Trump filed a $15 billion defamation and libel suit against the New York Times. The lawsuit criticizes the Times' endorsement of former presidential candidate Kamala Harris and cites the paper's news and opinion articles. The case adds to Trump's battles with the press. In July, he reached a settlement with Paramount over a lawsuit tied to CBS 60 Minutes interview. And then Vice President Harris, last year, ABC agreed to give $15 million to Trump's future presidential foundation. to resolve a separate defamation claim. He's got a $10 billion lawsuit against the owners of the Wall Street Journal. I could go on and on and on and on and on. He likes litigation.
Yeah, $15 billion also against the New York Times is more than their market cap, too. So
yeah.
That would be painful if they had to do something like that. Elsewhere in Washington, D.C., Matt, though, the SEC says that it is prioritizing President Trump's proposal to reduce the frequency of corporate earnings reports. For more, we're joined yet again by Bloomberg Intelligence senior government analyst Nathan Dean. Nathan, if you just look at what the SEC has done over the past week, so you have them prioritizing this. Last week, they also said it would consider ways to limit the risk of shareholder lawsuits. It also ruled Monday in Exxon's favor that it could use a strategy that would limit the power of activist investors. Is this an SEC shifting the balance of power to corporate America's CEOs?
Yeah, I mean, I would say that's certainly a good way to look at that. I mean, Chairman Paul Atkins, when he came in, he had three priorities, and one of those was capital formation. And this is something that, he's been talking about for the last 20 to 30 years, certainly when he was a former commissioner back in the early 2000s. So I think what you're going to see with this quarterly reporting is when the SEC comes out and says they're going to prioritize it, they certainly are. I mean, they're not in the business of telling the White House no. So I just put out a note on the terminal just yesterday essentially saying that I think what they're going to do is release what's known as an advanced notice of proposed rulemaking either at the tail end of this year or early next year. And essentially it's going to be about 30 to 40 questions going out to the marketplace saying, look, is this a good idea? Why should we do this? Because when they had a request for comment back in 2018, a lot of the buy-side community, and especially the hedge funds, didn't like this because they want that transparency that comes from quarterly reporting.
So, Nathan, what do you think? What do the other analysts at Bloomberg Intelligence think? Because this has been a debate for a long time. The Harvard Business Review is constantly railing against quarterly reporting restrictions, saying that they're responsible for short-termism, myopic views in the C-suite. And it's interesting that the president would agree with Harvard. Meanwhile, the Economist is always saying, no, we need this kind of transparency. That's why American investing is so exceptional.
Well, it's kind of funny because we just had a call about it this morning, and we had one colleague here in the United States saying, look, this is a horrible idea. I want that transparency. And then we had another colleague over in London saying, look, this is what I get all the time because my companies report on a semi-annual basis. So there's obviously a lot of different opinions here. And this is what the challenge for Chairman Atkins is going to be, because as he goes through this process, he's going to have the buy-side community and the market participants and the investors saying, look, I want this transparency. And back in 2018, BlackRock in particular said that transparency outweighs the benefits of what comes from long-termism. But I would also say that NASDAQ did a study back in 2018, and they surveyed 138 companies. And from the corporate perspective, 75% of those companies wanted to go to semi-annual quarterly reports. So as Chairman Atkins goes through this process, he's going to have to weigh which one is better and which one would he like to see. And that's why I think that there's a decent chance at the end of 2026 or in 2027 that we're going to move to this semi-annual basis, because I think the corporates, as of right now, will probably win out over the buy side.
I mean, Nathan, but isn't it kind of crazy to be like, you get an extra 3 months and that cures your myopic and short-term view? I mean, it's still reporting twice a year.
Yeah, exactly. And that's one of the reasons why one of my colleagues was saying, they don't want to move away from this because it's going to make the challenge of analysts and investors even that much more difficult with the lack of data coming in. You're certainly going to see a lot of folks turning to alternative data to try and figure out and fill that void. But, we'll just say is that, Chairman Atkins, when he comes in, or as he's been in, capital formation is one of his key goals. And one of his key goals was to protect companies. I would also just say here is that one of the consensus that came up in 2018 was this idea of, if you're trying to reach a middle ground, you would say for small and emerging companies under a certain market cap, they would be able to report on a semi-annual basis to try and go there and be able to build this long-term story, if you will, before you get into the nuances of trying to report every quarter. But I would just say is that the Securities and Exchange Act of 1934 requires quarterly reports. And so that's something Congress has to change. The SEC can't do that. But there's a lot of flexibility here. So quarterly reports are going to stick around. But using an extreme example, the SEC may come back and say, for quarters 1 and 3, you just need to sign a form and say you're good. It's quarters 2 and 4 where you're going to have the 10Q in the annual report.
Nathan, this story obviously isn't going anywhere. Looking forward to continue to catching up with you on it. Bloomberg Intelligence senior government analyst Nathan Dean. Coming up on the show, the latest Bank of America survey finds that fund managers are concerned about valuations but remain overweight equities. Citi's Scott Chronert weighs in next. You're watching Bloomberg Open Interest. Bank of America says global equities will likely rally even higher as U.S. economic growth looks under control. The latest Bank of America survey of fund managers shows 28% of them overweight equities. That's the highest in 7 months. The team led by Michael Hartnett says the risk of a recessionary trade war has diminished. Citi U.S. equity strategist Scott Chronert joins us now. Bank of America, the team over there, Scott, goes on to call it bulls galore. Is it the same for you? Is it growth expectations go higher from here and the rally continues?
Well, Dani, I think it's a little bit of a caveat here. Yeah, we're still quite constructive on the structural setup for U.S. equities, but I think we have to acknowledge in this latest run-up to 6,600, which we hit yesterday, that's our year-end target, right? And at 25 times trailing earnings, 22.5 times forward earnings, a lot is getting priced in. So the way we see it setting up here, very simply, is that we think going into the Fed announcement this week and then the Q3 reporting period, we're likely to see volatility pick up a little bit. But as we then get further into the Fed rate cut cycle from here, we think that sets up for a year-end rally, I think back to where our current price targets are. Again, sets up for, in our view, a growth plus cyclicals follow through into 2026. So color is positive, but with a nuanced perspective on the shorter term here.
All right, we'll dig into that nuance, Scott. You're going to stay with us through the open. We are looking at futures that continue to rise, although not at their session highs. We punched through 6,600 at the close yesterday. We'll see if we can continue that rally after the opening bell. This is Bloomberg. We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller looking at futures that are mildly higher after we punched through 6,600 yesterday, again to an all-time record. You can see futures are up just about 1/10%, not quite that. A little bit more on the NASDAQ as tech stocks are moving higher and the Russell futures are down. I should note that the 10-year is just creeping down a little bit as well at 4.04. Here at the New York Stock Exchange, you've got Ralph Lauren, some kind of leadership team there. They've done well. The stock has more than quadrupled over the past 5 years, and the CEO is there as well, Patrice something French, as you would expect from Ralph Lauren. Down at the NASDAQ, you've got kind of the opposite going on. Eric Trump ringing the opening bell with American Bitcoin. He's deep into crypto, also still works obviously for the Trump organization, and that Trump family is absolutely cleaning up, just making a killing. Dani, what are you looking at?
Someone else making a killing. Larry Ellison probably adding, another 10 billion to his wealth today. He added 10 billion yesterday. It's about the TikTok deal. Oracle surging up just under 4%. CBS News reported that it could play a crucial role in a TikTok deal between the U.S. and China, the structure of which has not been yet reported on, but Matt Trump saying moments ago that a deal has been reached with what he calls a big group of investors.
Yeah, and apparently Oracle working with TikTok to secure its data for quite a long time, which Caroline Hyde and the Bloomberg technology team know a lot about, but we're just learning about. Tesla extending gains as Elon Musk says he's back at work. He's planning to go and check out a data center. He's going to talk to the robots team on Friday night. He's going to look at production of the actual cars. He's just doing a ton, and he put his calendar out on Twitter for you to see it if you don't believe it. So those shares continue to power higher as well. He's back in the #1 slot in terms of the richest man in the world. We are back with Citi's U.S. equity strategist, Scott Chronert. Let's talk about this rally, Scott. I mean, it's easing off a little bit today, but still looking at green arrows on the S&P and the NASDAQ. Do you think that this economy, maybe with Fed cuts, is going to do better, expand more than we may have expected previously?
I think that's the setup, Matt, and that's the way we're thinking about it. We still have been arguing for some time now that the equity markets are discounting something approaching soft landing, if not Goldilocks, where you get rates coming down as I think the Fed can get more close to a neutral policy perspective. At the same time, underlying economic conditions remain fairly supportive of fundamentals. The issue very simply for us is what's priced in at a given point in time. And as we pushed higher to this latest run up to 6,600, we just get a little bit nervous that in the very short term, meeting implied expectations is going to be a bit tricky in that Q3 reporting period. But the structural setup, I think for our perspective, it's all systems go.
When it comes to what's priced in, it is at least a bond market that's pricing in 5 rate cuts by next summer. Scott, if you go back to the last time we had a rate cut by the Fed, it was last December, and stocks sold off 3%. It was dots that suggested we wouldn't get as many cuts as the market was hoping for. Is there a risk that that happens this time around again?
I think there's that risk, Dani, but I think the way we would come at it is, where are we in the Fed cycle? I'm not sure that you could even really call this a cycle, but as you know, we've gone 9 months now without a Fed cut. I do think here the messaging is important. And again, I'm going to come back to this point. What I think we really want to see is Fed moving towards neutral. And that's an important starting point that I think the market is discounting, but we're still far away from getting to a point where you would say the Fed is actually accommodative in trying to stimulate activity. So somewhere in here, when you're talking about moving from still modestly restrictive, which Chairman Powell has mentioned, going back to Jackson Hole, to something more neutral, that's still setting you up for a little bit of economic sensitivity, right? And so we just have to be aware that this path from restrictive to neutral is different than from neutral to accommodative in terms of how the market begins to price in ultimate recovery.
Scott, you have been, among other things in your career, really a pioneer in the ETF space. And I wonder which ETFs or which areas you like right now. One of the things President Trump has been, one of the reasons President Trump has been pushing for rate cuts is that he wants to reinvigorate the housing market, wake it up. Do you think that is, for example, a possibility? Has the market priced that in already?
I don't think the market's fully priced that in, Matt, because we're talking about Fed funds, which is a far cry from where mortgage rates are, right? And so part of the issue here, and this is sort of a city house view, is that you're going to get Fed rate cuts. Let's say in our view, it's 5 consecutive 25 basis point cuts between this week and next spring. But that's still against a backdrop where the rate curve is expected to remain steep. So getting from lower Fed funds rates to a more stimulative mortgage rate circumstance is a little bit less visible right now. The market's begun to price in expectations that's going to happen, but that's going to take more time. That's going to take more time. The what if work we've done on this is that when you get Fed rate cuts associated with a steeper curve but more negative economic conditions, that actually sets up better for the home builders because you get more quickly to that expectation of rate relief and recovery out the other side. We're not there right now. So this broadening play into traditional rate sensitives, I think it's going to take a little bit more time. It's not going to be a first Fed rate cut. It's going to take that second, third, maybe fourth or fifth cuts from this starting point to really begin to give that stimulative effect. And that's sort of an early 26 time frame.
Scott, what do you think about small or mid-cap ETFs? I mean, is something there that you like? Because a lot of people have lost money betting on the littler companies and, as the big mega cap tech stocks power this rally. But I know that you're partial to S-mids.
Yeah. So, Matt, you mentioned earlier in the last question, and what do you think from an ETF lens? And so what's happened in this market is that the small mid-cap space is really interesting. It's typically, from a trading perspective, via the ETFs, viewed as your risk-on, risk-off, but more importantly, economic sensitive risk-on, risk-off trading vehicle. So when you watch the small cap action right now and you see the rally that we've seen in recent weeks in anticipation of potentially a more stimulative Fed, that's where this discussion goes. Small cap really, really likes an early cycle condition where you come off of, let's call it a weaker economic circumstance, and you get Fed accommodation, and then out the other side is a more aggressive fundamental re-rating. We're not there yet with SMID, but what you do have is a more attractive absolute and relative valuation setup. So legging into SMID here, small cap in particular, makes a lot of sense from our perspective. But in terms of that coast is clear call, we think that's probably a second, third rate cut discussion later in the year.
Scott, you just saying this has me thinking about financial conditions. If you're getting a more stimulative Fed, you're going to get tax refunds from the one big beautiful bill. And on top of that, we already saw stronger than expected retail sales. And as Matt Klein over at the Overshoot has been pointing out, this is an American consumer, an American household that has enormous financial firepower at their disposal right now. If conditions loosen further, what does that do to this market? What sort of sugar rush could we get?
Dani, I think we're sort of in sugar rush mode. I think I mentioned this earlier. If you look at the move we've had since the Iran bombing, which is 3 months ago now, it's crazy. But you've seen a 10, 11% S&P move. You've seen volatility metrics, whether it's for the stock market via the VIX or the RVX, crude, currency, interest rates, volatility's come down. That's been part of this surge that we've had recently. What I come back to, though, is that when you look at that income distribution, and this is really important to your question, our work on it suggests that the top half of the income distribution is essentially a net saver. The bottom half's a net spender. So when you look at these Fed policies and other President Trump-related administration policy effects, we think of it in terms of who benefits, who doesn't. What's so interesting about this is that top half is also where the equity assets are held. It's also where the money market fund assets are held. So that top half has actually benefited from rising rates. You get more interest income monthly on, let's say, your money market funds or deposits. As the Fed eases, that begins to lessen a little bit. So you get a little bit different discussion in terms of who benefits from this point going forward. I just want to come back to this point is that we don't dismiss. We think the Fed should be easing here, but historically, it takes a series of Fed rate cuts before you really get that stimulative effect that I think we'll be looking at going into 2026.
Also speaks to the lag you were saying in the housing market, too. Scott, this has been fascinating. Thank you so much for joining us. Citi U.S. equity strategist Scott Chronert. All right, a quick check on your markets this morning, 10 minutes into your trading day. What is moving us higher? We are moving higher this morning by 0.03%, but hey, that's still a record, so we'll take it. It is a push and a pull of tech on both sides. It is Oracle up 5%, just under that amount, with the TikTok deal seemingly something being agreed, something likely involving Oracle. So it's the big tech players, Aura, Meta, Apple, Amazon, Tesla. Again, Tesla still rallying despite that probe over their car doors because Elon Musk is home, and I'm not saying the full quote, and I refuse to. Meanwhile, on the other side, it is NVIDIA dragging us down. No real catalyst here, but again, it's tech on the top and tech on the bottom, just sort of as a function of how highly weighted these stocks are. If you flip it up, though, and look at the individual sectors, it is energy that is leading us higher. Oil prices are moving up this morning. You had President Trump saying to reporters just moments ago that Europe really has to stop buying Russian oil. There was also a Ukrainian attack on a Russian oil refinery overnight, too, so that pressuring oil. So energy's up, discretionary staples, the consumer sector also higher after that stronger than expected retail sales. And it is some of the bond proxies at the bottom, Matt. Financials and utilities, the worst performing sectors.
All right. Great wrap up there. We're going to continue following this market for you, especially Oracle. Absolutely surging this week on, well, the possibility of its role in a TikTok deal is one of the things. But one of the other things is that it's really emerged as one of the big cloud winners in this AI data center build out. Larry Ellison has reigned supreme, especially in his let's say, closeness to the President of the United States of America and Stargate. We'll break it all down for you. Next, this is Bloomberg Open Interest.
He was king, and it's an honor to have him as king. And, you know, I think he represents the country so well. I've watched. He's such an elegant gentleman, and he represents the country so well.
After Robert Redford passed away today, did you hear about that?
Did? Wow.
He was apparently in his sleep at his home.
Well, that's a good way to go, I guess. But I'll tell you, Robert Redford was great. He had a series of years that there was nobody better. This just happened, I guess, huh? Yeah. Wow.
He died at his home in Utah in his sleep.
Yeah.
And what movie would you say you liked him best in?
Well, you have a lot of them. Honestly, I'd say he made 7 or 8 great movies. They were really great. There was a period of time when he was the hottest. I thought he was great.
On TikTok, will TikTok go dark? Are you going to delay the TikTok ban?
Well, we have a deal on TikTok. I've reached a deal with China. I'm going to speak to President Xi on Friday to confirm everything up. We made a very good trade deal, and I hope good for both countries, but a very different deal than they've made in the past.
What companies are involved? What companies are going to buy
We'll be announcing that. We have a group of very big companies that want to buy it. And, you know, the kids wanted it so badly. I had parents calling me up. They don't want it for themselves. They want it for their kids. They say, if I don't get it done, they're in big trouble with their kids. And I think it's great. I hate to see value like that thrown out the window.
So on auto, can I ask you, so auto executives...
You know, you're talking about tens of billions of dollars.
Some auto executives are concerned that compromising the 15% for auto tariffs coming in hurts American automakers. What do you say to...
Well, I haven't compromised anything. Where did I compromise?
Going down to 15% from 25.
Going down to 15%.
From 25.
We charge, well, and where did the 25 come from? It came from there. You tell me. Just so you know, they paid nothing for years. Now they're paying 15%. And some things can pay more, like chips could pay more. Pharmaceuticals could pay more. You know, there's a bigger margin. With a car, you have to make 15% before you make a profit. It's pretty tough. So, but we had a good deal. Don't forget, European Union is paying our country because of tariffs $950 billion. Think of that. We're talking about a year. $950 billion. Japan is paying us $650 billion. These are countries that paid us nothing until I came along. And China's paying us a tremendous tariff. You know what the tariff is, right? You know what the tariff they're paying us? Yeah. What?
Yeah, so it's 30% for the fentanyl as well as whatever for the 301.
20% for the fentanyl. But the overall is about 55%. Okay. That's as opposed to nothing. Would you say that's a difference? We have a big decision coming up, and if the Supreme Court rules the way, hopefully they will, because, I mean, every legal expert said we win that case, but you still have to watch. And the Supreme Court's been terrific. I think they're very fair. All I want is fairness, and we win. But if we win the Supreme Court case, which is the finalization of tariffs, we will be by far the richest country anywhere in the world, and we'll be able to help our people more, and we'll be able to help other countries when we want to. But I will say, if we win that case, our country, you see what we've taken in just on a temporary basis. We've taken in trillions of dollars, trillions with a T, and we will be by far the richest country in the world. There'll be nothing close. And you know, one other thing, we'll have tremendous power to negotiate. The use of tariffs. I settled 7 wars. 4 of them was because I was able to use tariffs.
Hopefully, the other day in an interview criticized the fact that some CEOs make hundreds of times more in salary than average workers. He's worried about polarization. Yeah. Do you share that concern?
Well, I do say there's a big gap. I do say that. Don't forget, I'm a popularist. There's a big gap.
Mr. President, it's been a month since a month on, do you think that meeting accomplished what you hoped?
Yeah, accomplished a lot, but it takes 2 to tango also. You know, those are 2 people, Zelensky and Putin, that hate each other. And it looks like I have to sit in the room with them because they can't sit in a room together. There's great hatred there. But no, that meeting accomplished a lot.
Mr. President, you still have complete confidence in Patel. What are you hoping comes from his testimony on the Hill today?
Well, first of all, I think that Pam Bondi has done an unbelievable job, and everybody agrees with that. And Cash, if you take a look at what he did with respect to this horrible person that he just captured. He did it in 2 days. It took other similar cases 4 days, 5 days, 4 years, if you look at certain shooters. Now, I have confidence in everybody in the administration. My administration, and a lot of people are saying it, not just me, it's so far the best administration ever formed. You look at our financial people. Our country is making a fortune. We have to keep tariffs because our country has become successful because of tariffs. We have the case in the Supreme Court. That's a very vital case for the success of our country. It's very vital to negotiate with other countries. And remember, other countries charge us tariffs. That's a very, very big case. And if we win that case, our country will be by far the richest country anywhere in the world. And then we can help our people. We'll get rid of debt. We'll get rid of everything. We can help our people, and we can even help other countries where they need it.
Mr. President, narcotics in Venezuela. Narcotics in Venezuela. President Maduro in Venezuela says that you're getting ready to invade his country. What is his message to him?
Well, I would say this right away. Stop sending Tren de Aragua into the United States. Stop sending drugs into the United States. We knocked off actually 3 boats, not 2, but you saw 2. And the problem is there are very few boats out in the water. There are not a lot of boats out in the water. I can't imagine why. Not even fishing boats. There's nobody. Nobody wants to go take a fish. So it's one of those things. But I would say to him very strongly, stop sending people from your prisons into our country. They're sending their prisoners. They've done that already. So the numbers just came out. Another month with 0 people getting into our country. And these are figures, John, with people like you that would like me to do badly. Nobody has ever done on the border like I've done.
Mr. President, what will you tell President Zelensky if you meet with him in New York?
Well, he's going to have to get going and make a deal. He's going to have to make a deal. Zelensky's going to have to make a deal. And Europe has to stop buying oil from Russia. Okay? You know, they talk, but they have to stop buying oil from Russia.
Mr. President, there are some...
regarded to be the wealthiest man who's ever occupied the White House.
Okay.
How much wealthier are you now than when you returned to the White House?
Well, I don't know the deals I made for the most part, other than what my kids are doing. You know, they're running my business. But most of the deals that I've made were made before. And that's what I've done for a life. I've built buildings. Like I'm building a building here. You know where I built? You know what? You see that area? Yeah. That is going to be the greatest ballroom anywhere in the world. And for 150, so it gives me pleasure to do it for the country. And I'm paying for it. I'm paying for it. The country's not, and that's an expensive ballroom.
But is it appropriate?
I think it'll cost $250 million, and it will be, I think, the finest ballroom. So for 150 years, John, do you know this? They've wanted a ballroom. And now they're going to finally have it. And it's going to knock your socks off.
But is it appropriate, President Trump, that a president in office should be engaged in so much business activity?
Well, I'm really not. My kids are running the business. I'm here. You know what the activity, where are you from?
I'm from the Australian Broadcasting Corporation, Four Corners program.
Well, the Australians, you're hurting Australia, right? In my opinion, you are hurting Australia very much right now. And they want to get along with me. You know, your leader is coming over to see me very soon. I'm going to tell him about you. You set a very bad tone.
Well,
go ahead, John.
Maybe you
can set a nicer tone.
The UAE does a deal. What does it want in return?
Quiet.
Mr. President, what are you hearing about the operation in Gaza, the Israeli operation? Are you concerned?
Well, I'm hearing that they want to go in, and I'm also hearing that Hamas wants to take our 20 hostages plus dead bodies. You know, they have about 32 of them, and they want to put them in the way of any attack. And nobody's happy about that situation. It came out yesterday. I'm sure you saw that. They want to, supposedly they've taken the hostage out of deep caves and tunnels, and they're bringing them, putting them on the front line. Nobody's heard of that one for a few centuries.
We saw that the UN said that Israel is guilty of genocide, that they've committed acts of genocide in Gaza.
They voted on that?
New report out saying multiple acts of genocide.
When it comes to a vote, we'll see what happens. That'll come to a vote, but we'll see what happens.
And what do you make Pam Bondi saying she's going to go after hate speech? Is that, I mean, a lot of your allies say hate speech is free speech.
We'll probably go after people like you because you treat me so unfairly. It's hate. You have a lot of hate in your heart. Maybe they'll come after ABC. Well, ABC paid me $16 million recently for a form of hate speech, right? Your company paid me $16 million for a form of hate speech. So maybe they'll have to go after you. Look, we want everything to be fair. It hasn't been fair. And the radical left has done tremendous damage to the country. But we're fixing it. We have right now the hottest country anywhere in the world. And remember, 1 year ago, our country was dead. And now Washington, D.C. is fixed, and I fixed it. The mayor was fine. The mayor was just fine, okay? The mayor had the sick city for many years. She's been mayor for many years. The one that fixed it was me and my people, and it is so safe. You should take your beautiful wife tonight and have dinner down there. You won't be shot. You won't be accosted. You won't even be looked at incorrectly by anybody. Washington, D.C. is safe. Now we're going to Memphis, where it's pretty rough, to put it mildly. And then we're going to have to go. A friend of mine who is a big railroader, he stops at all the cities. He knows every city. He said, sir, you have to save Chicago. So I'm going to go to Chicago early against Pritzker. Pritzker's nothing. If Pritzker was smart, he'd say, please come in. So last week, over the last week and a half, 11 people in Chicago were killed, murdered, and 38 were shot. And then Pritzker, and by the way, this is going on constantly. If they lose less than 6 or 7 people a week with murder, they're doing a great job in their opinion. Chicago is a death trap, and I'm going to make it just like I did with D.C., just like I'll do with Memphis. Now, remember this. So a man comes into my office, one of the biggest businessmen. I'll tell you, he runs Union Pacific. Is that big? Biggest railroad in the world, I guess. And he started off as a railroader. He was running a railroad, a little caboose. He was in a caboose. Now he runs the whole damn thing. 45 years ago, he started off in a caboose. I don't know what that's all about. And he became the top, so that's a good place to start. But he came in. He knows the country intimately. He's looking to do a merger by another railroad, the one that where it had the little problem in East Palestine, right? And they want to buy that railroad, as you know, pretty public. But I sat with him and I talked. I said, so you know every city? Yes, sir. I go into every city, and I have for 45 years. I said, where would you go next? He said, St. Louis is in big trouble. He said, but Chicago is a great city. You can save Chicago, sir. Don't let Chicago die. This is the guy telling me with great knowledge and stuff. He said, don't let Chicago die, sir. It's dying. Don't let it die. I'm going to Chicago next.
The UAE, Mr. President. What do you think they want when you do a deal with that federal treasury?
Well, I just want something to happen, whether it's federal, state, most likely it's going to be state. The question is whether or not we overlap with a federal judge. So they're looking at that. But the state is very competent. The governor's doing a very good job. As you know, they have the death penalty. It's a tough death penalty, too, as you know. But they have the death penalty. So as to whether or not we judge, we will be working with them. We may or may not be able to judge.
And when it comes to the governor of Utah, what do you make of his overall message of nonviolence?
Well, I agree with it. I agree 100%. But most of the violence is on the left.
He said that social media is a cancer.
What?
Do you agree with that? The Utah governor said that social media is a cancer and more people should log off and take some time away.
Well, it's not a cancer in all respects. In some respects, it's great. But there are segments. There are deep, dark holes.
President Trump there speaking to reporters a little bit earlier as he heads to the UK to visit with King Charles. He touched on as many subjects as you would imagine he did, from Israel and Hamas to Zelensky and Putin. He made some headlines here. We thought or only had read about so far 2 Venezuelan boats that the U.S. Forces bombed out of the water. He says they've actually bombed 3 Venezuelan boats. And he actually claims that the U.S. has now taken in trillions, with a T he specified, from tariffs thus far. But at least from Treasury Department data, I see a much smaller number.
Yeah, the latest data over the past first 11 months of the fiscal year, tariff revenue was about $172 billion, so a significant less amount than trillion with a T. The other news item he perhaps made is that the Australian Prime Minister is coming to visit soon, talking to an Australian reporter too. He also talked about geopolitics, that Zelensky and Putin hate each other. Earlier to that, he also talked about the need for Europe to stop buying Russian oil. You are looking at oil prices moving higher this morning off the back of some of those comments.
Yeah, it is. I mean, it is mind-boggling that Europe continues to buy oil, 3 years into this war. We also heard that he's planning on doing the same in Chicago as he's done in Washington, D.C., and plans to do in Memphis. So he said he's going to repeat with the National Guard in Chicago what he did in D.C. and what he plans to do in Memphis, which is interesting. We got breaking news before President Trump started talking, or as he was speaking on Luigi Mangione. A New York State judge dismissed the most serious charge against Mangione, ruling that the evidence was insufficient to charge him with murder as an act of terrorism. This means Luigi Mangione isn't likely to get life in prison without parole. He is, of course, accused of gunning down healthcare executive Brian Thompson right here in New York City. Let's get more now from Bloomberg's national security reporter, Miles Miller. He joins us here on set. So, Miles, was this a surprise that he isn't likely to get the harshest sentence we thought he could?
The reason is that here in New York, the terrorism charge was created after 9/11, and it's for those very narrow type of cases. Now, second-degree murder is still a pretty large charge to get. It's not first-degree murder, which is left for police officers and people who work in emergency services and in some really specific cases. But second-degree murder is a very severe penalty in New York State. The reason, again, is because terrorism charges really need to meet a really high bar. And in this case, the judge in this case said that the evidence available didn't reach that high bar. But, you can set that aside because you know that when this state case is adjudicated, he will then go to federal court and he has federal charges against him. And in that federal case, he can face up to the death penalty based off of the charges. I mean, this was a very serious case. Obviously, we covered it in December when it happened, the 5-day manhunt. And when we saw, the court hearing today, the focus we thought was going to be on this double jeopardy, right? His lawyers have contended that, he is being charged in both state and federal court, and they should pick one. But for today's decision to drop the serious terrorism charges shows you that the judge believes that there is still a viable case. It's just on the second-degree murder charge, and we'll see that play its way through court.
So if the defense isn't necessarily getting that and getting a state case dropped, where do they go from here? What is their argument?
So they're just getting one charge in the state case dropped. They'll keep it on second-degree murder, and then he will continue with the federal case as well. It's important to note that he's got a powerhouse legal team. One person on his legal team spent a good amount of time in the Manhattan DA's office, so understands these kind of really tough cases and has prosecuted cases or has been a defense attorney in the federal level as well. You have a really big group of supporters who have come to court today in defense of Mangione, but this case obviously has reared its ugly head again as we talk about the propensity for political violence, and this case being one of those cases where not exactly political, but with a specific message against an insurance company, but still in that same realm. And so this case will continue to go on, just not with the terrorism charge.
Miles, thank you so much for bringing us that update. That's Bloomberg's Miles Miller on the breaking news that a New York State judge has dismissed the most serious cases against Mangione. Let's get a check on markets this morning, about 30 minutes into your trading day, and we have turned negative, just barely so for the S&P and NASDAQ, so maybe we miss out on another record high. The Russell 2000, interestingly, really lagging this morning, down 0.5%, despite the fact you do see yields lower across the curve, even though you got higher retail sales data than was expected. So not quite a consistent story across yields and equity markets. You are looking at oil markets higher too. But again, it is just a wait and a see from the Fed. Will they confirm 25 basis points and more rate cuts to come, Matt?
Yeah, we'll watch, continue to be on the lookout for treasuries at 4% right now. The 10-year trading at 4.032. Bank America says global equities will likely rally even higher as expectations for strong economic growth are keeping the bulls in control. We got the view from Citi earlier.
Going into the Fed announcement this week and then the Q3 reporting period, we're likely to see volatility pick up a little bit. But as we then get further into the Fed rate cut cycle from here, we think that sets up for a year-end rally. I think back to where our current price targets are, again, sets up for, in our view, a growth plus cyclicals follow through into 2026.
Let's continue this conversation with Nimrit Kang, Chief Investment Officer at Northstar Asset Management. Nimrit, what do you think about the argument that economic growth is going to surprise to the upside. Dani mentioning Treasury yields continue to come down. We expect the Fed to cut at least by 25 basis points on Wednesday. Does that support U.S. economic growth?
Matt, we've been waiting for this handoff from the AI-fueled growth that we've been seeing to a more broader growth now for a while, right? So, yes, there is a whole case here that the Fed cut starts to stimulate the cyclical parts of the economy that have been lagging behind. We haven't seen growth in the net income year over year, according to Bloomberg, for Russell 2000 since the last quarter of 2022. And that's actually been true for most sectors outside of the big tech and the AI-driven rally. So yes, there is definitely a case here that the Fed easing cycle starts to stimulate some of the cyclical sectors of the market, particularly housing, and that starts to trickle into providing support for the market here.
Even as you've seen support for the market, and Nimrit, you've continued to see foreigners buying. You're looking at a dollar that continues to get hammered. The euro currently at its strongest versus the greenback since 2021, trading at 118. Deutsche Bank points out that overseas investors are slashing their dollar exposure at an unprecedented pace. What do you make of the fact that people don't want to own dollar, but they're happy to own American risk assets?
Yeah, I mean, this kind of bifurcation we're seeing everywhere, right? We're seeing things that don't traditionally make sense are starting to, that's what we're seeing. Basically, what you're seeing with the dollar weak is globally investors want to diversify their exposure. The whole argument of politicization of the Fed, how that boils down, what does that mean for the longer term prospects for the dollar when we don't have an independent Fed? So that's in the background here as well. Meanwhile, we can't deny that US is finally starting a monetary easing cycle, which might be positive for the rest of the 493 S&P companies, and that could fuel some of the momentum here. So that's kind of what we're seeing. The same study that you're referring to also showed that one of the reasons the investors want to buy corporate assets, but they want to hedge the dollar exposure. But even the corporate assets, the kind of corporate assets they want to buy are very much focused on AI names, the technology prowess of the United States of America. And that's what we're seeing.
What about the rest of the S&P 500, Nimrit? Surely there are far more than 7 companies active in artificial intelligence, but a lot of the other companies in the index will be hit by tariffs in one way or another. How do you expect that to play through into earnings? Because corporate earnings have been, at least on the average, really strong.
Yeah, Matt, the corporate earnings, you can say, have been strong, but let's unpack that. Let's look at the sectors that are tariff sensitive. Let's look at industrials, retail. Those have not been great earnings. They have been absorbing the cost of increased tariffs. And that, a lot of that is just creating uncertainty. So that's the part that we've seen. I think the market has become desensitized to the whole tariff rhetoric at this point, saying that we really don't know how it's going to play out. Coming into the second quarter, people thought the tariffs were going to have a much bigger impact. They didn't, because we had corporates pre-buy the inventory beforehand, and some of them holding on and not passing it through. But we've seen the hit to margins. I mean, look at the retail earnings. Look at Restoration Hardware from the other day. So we have been seeing that play out. It's just been very selective in a few sectors. That's where we've been seeing. The other part that I would point out to is, so far we've had AI CapEx cycle has been very strong, 3 to 4% of US GDP. That's basically come in and replaced the GDP expenditure that we usually do on residential structures. So I think there's this hope that at some point that part will start to pick up with the Fed easing cycle, and that will support the economy as a whole.
Nimrit, it also speaks to the latest Bank of America Fund Manager survey. I think one of the most interesting things in that was investors' propensity to reward CapEx. 39% of those surveyed want companies to increase capital spending. That's the most since December. Only 27% want to focus on balance sheets. So balance sheets, cash flow, no longer the priority. Nimrit, do you feel the same way about companies, that you yourself find it more attractive when you have more CapEx spend, and I guess in many cases AI spend, than focus on a balance sheet?
Yeah, this is classic FOMO kind of behaviors going on, right? I think what's different though is, back in when we had the capex spending going on with the railroads and something like that, we're looking at 15, 16% of the GDP. So the AI cycle, 3 to 4%, maybe less than that, but still plenty of reason to take a pause here. I think the difference, which we have seen over and over people talk about, is that these companies are flush with cash, but not all of them, right? OpenAI burning through cash, and they're being funded by the private markets. The private markets, in turn, are funded by investors who are looking for the FOMO trade. They don't want to miss out. In the end, it comes down to how are you going to monetize all this expenditure and how are we going to see the return? I think the jury is far out on that. We don't know yet, but we're in this where we don't want to miss out. That's why you see the momentum index up 24% year to date, almost double that of S&P 500. People want to pile into the same names, and so it keeps going on and on and on.
Sounds kind of like something you'd see heading into a bubble. Nimrit, we're going to have to end it there. Thank you so much for joining Nimrit Kang of Northstar Asset Management. Coming up on the show, the SEC says it's prioritizing President Trump's proposal to move away from quarterly earnings report. We're going to speak to Bloomberg Economics columnist Allison Schrager about it next. You're watching Bloomberg Open Interest.
Let's focus back on Washington. The SEC says it's prioritizing President Trump's proposal to reduce the frequency of corporate earnings reports. Allison Schrager, economics columnist for Bloomberg Opinion, joins us now. And Allison, we've had a lot of guests on over the past couple of days who, maybe in part because this was a suggestion from Donald Trump, have really pushed back against the idea of scrapping quarterly earnings reports, saying that this is part of what sets American companies above the rest. This is part of the reason that we have a premium. Do you disagree?
Yeah. I mean, I think we have a premium for a lot of reasons, particularly that we have the most innovative and profitable companies in the world. And it's important to remember, I think there's pluses and minuses for this proposal. But Hillary Clinton and Barack Obama also spoken favorably of this. And this used to be the way companies did things before 1970. And it's the way
before 1970, Allison, that was 55 years ago.
Well, the UK's done it this way since 2014, so it's not outrageous. And as I said, like, Democrats have proposed this too. I said there's pluses and minuses for this, but I think this is definitely a serious proposal that definitely has some benefits.
In the UK, I think 90%, from reading your story, 90% of UK firms still report quarterly earnings. So it doesn't seem to have changed behavior that they put an end to the quarterly reporting experiment.
Yeah, because, I mean, it's a good signal that you're willing to be so transparent and you have the resources to be that transparent. And it's not like this is information companies don't know anyway. But I think it's important that the companies that aren't reporting quarterly tend to be smaller firms, because this is actually quite costly. The compliance costs involved are non-trivial. And if you're a small company, they can be a significant share of revenue. And for a lot of reasons in the last couple decades, smaller companies were already at a disadvantage, certainly in public markets. So to some extent, if this happens, I'd expect larger companies will still report quarterly anyway, but smaller companies will now have the option of reporting semi-annually, which will lower their compliance costs.
Allison, I think so many people would be sympathetic with that point of view. You also, though, have a lot of SEC action over the past week that maybe aligns with this. The SEC saying that it would consider ways to limit the risk of shareholder lawsuits. It also ruled in the favor of Exxon and their strategy to limit power of activist investors. Taking a step back, is there a wider concern, though, that you have an SEC that is moving more favorable to the CEOs of America and less in the way of favoring shareholders?
Yeah, I mean, it goes in waves, and this is honestly what people voted for. I mean, Donald Trump did promise to be more business friendly, and this was part of, let's be honest, his pro-growth strategy. So, I mean, growth usually comes with risk. You know, more sort of easier capital comes with more financial risk. So, I mean, this is a constant push-pull trade-offs that we're making in the financial sector, and this is just, again, the latest example of that.
What guardrails would you put in place to ensure transparency, to ensure that we don't have a widening of information asymmetry, to use a surveillance term, right? I guess on the plus side, the bigger firms would have more alpha?
Because they're reporting more, they'll probably report more
No, because
regularly.
I mean the bigger sort of analysts on Wall Street, because they have a deeper look, or hedge funds could get, better information than retail traders, since we're not all looking at the same quarterly reports.
I mean, perhaps. I mean, I guess it's debatable whether or not there is actually that much valuable information that they will be learning that you can actually get quarterly versus semi-annually. I mean, really sort of, the question is, why are retail investors, trading on information that's quarterly anyway? I mean, we should all be sort of long-term investors anyway. And, is information you're getting quarterly versus semi-annually really going to make that big a difference? Perhaps if you're a day trader, but not for most people.
Allison, there's a really entertaining op-ed from FT's Lex today, which said that we're going to move away from quarterly earnings, but to radical transparency when it comes to data, because you have all these data companies like Palantir, like Snowflake, that allow the analyzing of data and storing of it, and then you can have an AI agent constantly put out data. So they imagine a world where you're constantly having updates from companies, just because it's going to become all that much more easy, maybe at a 1-month lag or something like that. Could you see a world in which that occurs?
I think about this a lot, particularly with the issues we're having with the BLS, of maybe the way we're analyzing and collecting data is outdated everywhere throughout the economy. And we do have the capacity to have radical transparency on not only company earnings, but, inflation and consumer behavior and all of these things. So, I mean, maybe this whole conversation is sort of outdated anyway, and that we are moving towards this. And, I'm all about transparency. More is better, but I'm also against compliance costs.
Maybe I'm being cynical, Allison, but I feel like there's been a lot more pushback against this idea because Donald Trump suggested it. And you point out Barack Obama and Hillary Clinton were also for scrapping quarterly report regulations. I note that the Harvard Business Review has been writing about the problem with short-termism because of this for years. Do you see that as well?
Yeah, I think that's true. I mean, there is a little bit of, Trump suggesting it, so it must be a bad idea. I mean, to be fair, he sometimes does suggest things for not maybe the best reasons. So, I mean, there is a reason why people do jump to that conclusion. But in this case, again, this is not an outrageous thing. Other countries do this. We've done this before. This has been an idea that's been floating around for a long time and does have some real benefits.
Allison, great to get your take. I recommend everyone read your piece on Bloomberg Opinion. Allison Schrager there. You can check out her work if you have a terminal in front of you. Type OPIN GO. Otherwise, you can go to Bloomberg.com/opinion. Let's get now to high interest. Look what's making headlines around the world. Retail sales rose in August for the third month in a row. It was a broad advance, rounding out a summer of resilient spending by U.S. consumers. 9 out of 13 categories posted increases, led by online retailers, clothing stores, and sporting goods, likely to reflect back-to-school shopping. A New York State judge dismissed the most serious charge against Luigi Mangione, ruling that the evidence was insufficient to charge him with murder as an act of terrorism. Mangione is accused of gunning down healthcare executive Brian Thompson right here in New York City. That ruling means he won't face life without parole. From the state case, as Miles Miller tells us, he could still face the death penalty on federal charges. And Hollywood icon Robert Redford passed away early this morning at his home in Utah at the age of 89. You heard the president talking about that briefly. His storied career spanned over 60 years, included leading roles in classic films like Butch Cassidy and the Sundance Kid and, pointedly, All the President's Men. He was also an Academy Award-winning filmmaker and the co-founder of the Sundance Film Festival. get a check on the stock market right now using the move screen. I think it's the most dynamic way to look at any index. You can see that we came down and bounced off session lows. We're still off, but only by 0.06% on the S&P 500. 6611 is the level we're looking at right now. Look at the leaders here: Apple, Amazon, Tesla, Oracle, Facebook. All up at the top, all adding index points, but the big kahuna, NVIDIA, is down right now, less than 1%. Nonetheless, it's such a heavyweight. Broadcom is also losing some ground, as well as Microsoft, United Health, and Google and Berkshire. Take a look at the sector breakdown here. We only have two sectors gaining, which is not a great sign. Energy up as the underlying assets rise, and the consumer discretionary rising as we got better than expected spending data. Everything else is losing. Utilities, financials, real estate, and materials really bringing up the rear. Coming up, U.S. retail sales data came in hot. It beat Wall Street estimates. We'll speak with Jean Madar, InterParfums Chairman and CEO.
The U.S. consumer remained resilient all summer. Retail sales rose for a third straight month in August, led by online retailers. Joining us now is one retailer who has a very key view into the consumer. It is Jean Madar, InterParfums Chairman and CEO. The company recently reaffirmed its 2025 guidance after record net sales in 2024. Jean, thank you so much for joining us this morning.
Thank you, Dani.
When you think about perfume, it's kind of one of the life's little luxuries, but presumably people are happy to pay up for a perfume when they're feeling good about things. So is the consumer feeling good right now?
Yes, consumer is feeling good. Fragrance is still very resilient in the beauty environment. It has been the fastest growing segment in beauty for 4 or 5 years, and it's not stopping. We are starting now the Christmas season. So soon you're going to go to department stores, specialty stores, and you're going to see our gift sets, value set that we push for Christmas. And we see no slowing in fragrance, for sure.
You own a number of, you own a couple of scents of your own, right? Lanvin and Rochas.
Yes,
I don't know if I'm saying that.
Yeah, good,
correctly.
good.
And then you do licensed fragrances for a ton of businesses, from Abercrombie & Fitch to Lacoste, Guess. We have a list of some of them here: Jimmy Choo, Kate Spade, Coach. Where are
a lot of American brands.
A lot of American brands. Where are you making these scents, and what kind of tariffs, if any, do you face?
Yes. So the tariff has been hitting us a little bit by surprise, but basically our company sells 50%, has 40 to 50% of its business in the US and 40 to 50% of its business outside of the US. So with this tariff hitting us, we have taken a very simple decision.
But where do you actually bottle the perfume?
The products that are sold in the US are bottled in the US.
I see.
The products that are sold in Europe, for instance, will be bottled, filled in Europe. Before the tariff, we had a lot of products filled in the US and re-exported to Europe or the Middle East. But the decision of the company has been to manufacture closer to where the product eventually will be consumed.
One of the interesting things in cosmetics right now is just how much of a moment they're having on social media. At least for tweens, you get even younger than tweens, 6-year-olds buying weird skincare products because they see some influencer doing it. How much of marketing for perfumes right now and consumer habits are also being shaped by what people are seeing influencers do on TikTok?
So social media is the name of the game. Doesn't mean that the traditional department stores and brick and mortars are not doing their job. But that's true that something happened in the last 3 years. People can buy a fragrance without smelling it. You can go on Amazon, you can go on TikTok and listen to someone talking and describing a flavor, creating an emotion, and then you click and you buy. This is new. This is new. You used to to go to a store and be a little harassed by the beauty advisor behind the counter.
You can still do that, but yeah.
Yeah, you can still do it. But today, I think that people are curious about the ingredients. And before the show, you told me about one of the fragrances you were wearing, and you remember that it was orange, neroli, and fig. And I think that more and more people, and we're going to talk about the younger customer, are fascinated by what is in the bottle. I don't know about 6-year-old using skincare, but we see a lot of 12, 13, 15 years old going to TikTok and creating a wardrobe of fragrances. And these are not cheap. They go and spend $200, $300. Where the money comes from, we should ask the parents.
You're based in Paris,
yes,
but you also have a stock listed here,
yes,
in the U.S.
Yes.
And I wonder what you think about, completely separate from this, quarterly reporting, because it's an issue again, whether or not companies should have to, and the reasons that critics of quarterly reporting have come out against is that they think it encourages short-termism, a myopic view from the C-suite. What's your take on the requirement and, your leadership style? Would it change if you didn't have to report quarterly?
It's a great question, because we have been a public company in the US for 38 years. So we have been filing quarterly for 38 years, which is, I think, bad for business. The quarterly reporting is bad for business. It encourages short-term vision. And I understand investors who want transparency and they want to know what's happening. But if they think that a quarter makes or breaks a company, it's totally ridiculous. I think that eliminating this quarterly report and go to 6 months, because I think a year is a little too long to see if things are good or bad. But 6 months is a better timing.
So would you do things differently if you didn't have to report quarterly?
I think it will create less pressure on the team, and of course we're going to save money on reviewing auditors and administration for sure.
John, it's been great spending some time with you.
Thank you.
Do come back.
With pleasure.
We really appreciate it. Jean Madar there of InterParfums talking to us about the business, sales, kids on TikTok, and quarterly reporting. Let's get a check on what's going on in the markets right now. You can see there are some red arrows there at the top. The S&P 500 down 0.1%, but we did break through 6,600 yesterday, which is quite impressive. And you do see also a continued drop on the 10-year. No, we're getting closer to 4%.
Yeah.
We could come in below that any day now.
I'm kind of surprised that in itself is not powering equities higher this morning. But to your point, a 25th record high so far this year for the S&P 500 at a time when we're worried about a slowing consumer, when some people, not consumers doing well, but labor market, and when people are arguing for 50 basis points worth of cuts, yet stocks go higher.
Yeah, let's get a look at some of the single stocks, some of the big ones moving at this hour. Tesla's one we've been talking about all morning long. You can see the shares are up 2% because Elon Musk implies that he's going to come back to work. He releases a schedule and says, "Daddy's home, baby," or something to that effect.
He did not say baby. Thank goodness.
You can see from his tweet that he plans to meet with the robot team on Friday night. He plans to tour his giant data center, Colossus 2, on Monday. He's got back-to-back meetings scheduled. Maybe you can put in an appointment, if you DM him.
He is working a full 12-hour day. So, yeah, only so many hours in one day. Oracle also rising, as we were just looking there. It was a report from CBS News that they could play a role in this U.S.-China TikTok deal. I think the net sum of this is just every day Larry Ellison adds another couple billion to his net wealth.
He's doing well, although he's been re-overtaken by Elon Musk as the richest man in the world. Disney announced plans to acquire only a 2% equity interest in Webtoon, but that is sending shares of the LA-based company soaring. You can see a gain of 30%. It's a partnership that will make more than 35,000 comics available via a single subscription. And as a the father of someone who's addicted to the Disney Channel, I can understand why they get that pop.
Fair enough, up some 30%. Okay, coming up on the show, PIMCO's Tiffany Wilding on why she thinks the Fed will cut rates by 25 basis points tomorrow, but we'll discuss going 50. She's going to be joining the show next on Bloomberg Open Interest. The Fed's two-day meeting is underway with markets anticipating the first rate cut of the year. Joining us, who is monitoring that meeting in Washington, D.C., is Michael Mckee, Bloomberg's international economics and policy correspondent. So, Mike, widely expected to be a 25 basis point cut, but what hints, what tensions might we get in what comes after that?
Well, we're going to be very interested in the dynamics of the meeting because we've got two new participants. Well, one new and one who was a maybe participants. Fed has confirmed their meeting got underway at 10:30 this morning Eastern time, and that Lisa Cook and Stephen Miran are both in attendance. Miran was sworn in this morning by a federal district judge in time for him to attend the meeting after being confirmed last night by the Senate. And of course, Lisa Cook was allowed to remain by the appeals court last night as well. So a full house of Fed officials are attending the meeting. Now, the White House says it's going to appeal this Cook ruling to the Supreme Court, but so far they have not filed. The market, as you mentioned, Dani, is pricing in a 25 basis point cut. The question is, will there be any dissents? A couple people might say, including Miran, we should have 50 basis points of cuts. And there's also a couple of Fed officials who think maybe we shouldn't have any cuts. So the potential for a three-way split is there. There is credibility questions about the dot plot coming up. When they try to tell us what the path ahead is going to be, what's that look like if Cook were removed, if Miran wasn't reappointed, if and when Jay Powell leaves? And there's always the possibility that all the Fed bank presidents get fired by the Fed if Trump gets control. So do we really know what the path is going to be going forward? We'll be looking forward to the final item. What is Jay Powell going to say about all of this when he holds his news conference at 2:30 Wall Street time tomorrow?
Mike, it seems to me, I've listened to Donald Trump or read Donald Trump suggesting that the Fed should cut anywhere from 1 full percentage point to 3 percentage points. Why would Miran only dissent with a 50? I mean, doesn't he listen to his boss?
Well, I think even Stephen Miran would have a hard time explaining why you would cut 300 basis points in one move. But Scott Bessent this morning said he's not looking for 300 at the immediate. He's looking for that to be something like the neutral rate, 1% be the neutral rate, which is obviously much lower than anyone else thinks it should be. But we'll see if Miran keeps dissenting, if he even dissents today.
Yeah, right now the market is pricing in a 3% terminal rate. Mike Mckee, thank you very much for that. Bloomberg's Michael Mckee in Washington. Let's get to PIMCO economist Tiffany Wilding. She expects a 25 basis point rate cut from the Fed tomorrow, writing, we expect Chair Powell to keep the door open to more rate cuts to come as the Fed restarts the cutting cycle and gets back on a gradual path to neutral. Tiffany joins us now. And what, in general, Tiffany, would you think a neutral rate is? Does it seem more like 3% to you or potentially lower?
Yeah, well, so if you look at the FOMC projections, and as you mentioned, there's, I think, a lot of uncertainty around the cast of characters that'll continue to be projecting those dots as we move into 2026. But if you look at them now, the median participant thinks the real neutral interest rate is around 1%, which add 2% inflation on top of that is a 3% nominal neutral interest rate. Now, if you compare that with various econometric estimates of neutral, you kind of get anywhere from, I would argue, 2.5%, to maybe 3% in terms of the neutral interest rate. So I think that the Federal Reserve is basically there. And I think this is something that you have to try to understand and figure out over time. And this is ultimately why we think the Federal Reserve, won't drop interest rates by, 100 to 300 basis points overnight, because you're not really certain where that neutral rate is. And so you want to get smaller drops in to see how it's impacting the economy over time, so you can make adjustments. And we think that first adjustment back towards, something closer to neutral happens at the meeting this week.
So, Tiffany, you're talking about an adjustment getting to neutral. What you're not talking about is the Fed moving to something that looks more accommodative. What does that mean for the response from this economy as the Fed starts to move, and the likelihood of getting something that looks like re-accelerating growth?
Yeah, I mean, I think the bottom line for us is that the policies that we've seen from this administration have they are putting in place, a very dramatic shift in economic policy in the United States, which has very complex interactions potentially on the economy. We're just starting to see that shift. Add to all of those complexities that you have a tech and AI investment cycle that's happening under the surface as well, that's sort of interacting with all of this. When we look at the data, basically what we see happening is that companies are, I think, surprisingly not relying as much as expected on price adjustments to manage and offset some of the tariff cost adjustments associated with tariffs, but they're actually more heavily relying on cutting labor costs. And I think that's because you have large companies that are benefiting more broadly from this shift. They're able to hold prices. And you have the smaller and mid-sized companies that are really struggling as a result of that, some of them going out of business. And I think that's why we've seen the labor market deceleration that we've seen this year as well, is that, again, on aggregate, companies are cutting labor costs. Now, ultimately, for the Federal Reserve, this matters because it just means that inflation expectations and more sticky inflation might not be as big of a worry as they initially thought. Now some price adjustments are happening, but overall, we think the balance of risks here are tipping towards them getting back on a path of adjusting interest rates lower, and that's what you're going to see from them today.
So I think
this week.
Tiffany, this bears repeating. You're saying that, when we saw these tariffs, a lot of economists said that's obviously got to get passed through in the price to the consumer. But what you're saying is, rather than passing those costs on to the consumer, big companies are firing workers and a lot of small companies are just going out of business.
Yeah, I mean, that's what the aggregate data it basically is suggesting. And that, that is a big departure from, how economies have adjusted in the past. Now the scale and scope of the tariff increases that we've seen is really unprecedented in modern times. So we, like many other forecasters, made educated guesses about how the economy would evolve. But it does look like, I think, to the surprise of many, that the labor market is bearing the bigger piece of this adjustment, at least so far. And I think part of the reason that could be the case is that you are getting this clashing investment, digitization and AI investment cycle that's happening as well. So you're seeing larger companies that are able to invest in AI. Those are the companies that will become less labor intensive, and they'll be able to better compete. Some of these smaller companies that can't do that, they will, they'll have a much more challenging time. And so I think that's part of the reason why you're seeing the labor adjustment here. And again, if that continues, then I think it opens the door. It should allow the Fed to get back on its normalization cycle.
Tiffany, really wonderful to have you help set up that decision tomorrow, 2 p.m. New York time. That's PIMCO's Tiffany Wilding. Thank you for joining us. Coming up on the show, President Trump heads to the UK, where he's expected to unveil $10 billion worth of deals. We have what to expect coming up next. You're watching Bloomberg TV. President Trump is on his way to the UK, and there he's expected to announce economic deals totaling more than $10 billion during his trip this week. Bloomberg's Lizzie Burden joins us now from Windsor. Lizzie, we heard from the president right before leaving for the UK. What sort of investments, announcements, deals might we expect from the U.S. president?
Well, hey, Dani from Windsor. I have to say, what a fantastic backdrop we have. It's not quite Buckingham Palace. That's where President Trump came for his first state visit in 2019. But this is an unprecedented second state visit. And you'll remember the impact of that hand-signed invitation from King Charles III delivered to President Trump when Keir Starmer went to the White House in February. Britain going to the front of the queue for a trade deal and getting lower tariffs than the other allies. So really, as you say, business at the forefront of this visit, at least for Keir Starmer, that $10 billion of deals economically expected. And that will include, we are told, an agreement on defence technology cooperation, also a nuclear partnership, and also efforts to bring together the financial hubs on both sides of the Atlantic. We've already had news from Google that they're going to invest £5 billion in the UK to try to stimulate the AI economy here. So there's a lot on the table. You've got the likes of Sam Altman from OpenAI, Nvidia's Jensen Huang flanking the president on Thursday when they sit down with the UK Chancellor and the Prime Minister. So a lot on the table business-wise, but I have to say this visit could not come at a worse time politically for Keir Starmer.
Yeah, I was going to ask, what are the risks? And for someone like Keir Starmer, who I imagine already is walking on eggshells on a daily basis, this seems to be a big risk.
You're absolutely right. I mean, it's all come to the forefront because Starmer's lost 3 from his government in the past 2 weeks alone, Matt, including the UK's ambassador to Washington, Peter Mandelson, who, of course, would have had a starring role in this visit. And that comes back to his links to Jeffrey Epstein, and it comes back to our Bloomberg scoop on those emails between the two of them. I have to say that Epstein is the link between Starmer via Mandelson, the King via his brother Prince Andrew, and Donald Trump himself. So there's going to be some painful small talk, to say the least. But more seriously, there could be questions at the press conference at the end of this trip on whether Starmer thinks that people who have links to Jeffrey Epstein should even be in high office. Trump is not popular here in the UK, and Starmer cannot afford to be seen to be appeasing Donald Trump. There is also the question of Starmer planning to recognise the state of Palestine at the UN General Assembly in New York next week. That could come up. But ultimately, this is Britain deploying its ace, the King, and it cannot be seen to not gain anything substantive out of this visit.
All right, Lizzie, thanks very much for joining us. Lizzie Burden, they are standing outside of Windsor Castle in Great Britain. It's so cool that they have a king,
It's the coolest.
I love that they're mired in this old school monarchy.
It's nice because it means that the king gets to invite Trump to dinner, and Keir Starmer gets a win. He gets to bring, the letter offering to bring him over, and he gets brownie points.
I hope they take a picture and do a hand comparison, the two of them. Charles and Trump.
I'm sure that's exactly what will happen.
Coming up tomorrow, Ron Temple of Lazard joins us, Stephanie Guild of Robinhood, and Michael Darda of Roth Capital Partners, plus Bess Friedman, our favorite realtor in New York. This is Open Interest.